Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst, and today we are executing a high conviction data-driven analysis of 5 stocks to buy now. This isn't a speculative list, this is a strategically constructed portfolio designed for the current market. A market defined by the structural demand for artificial intelligence, the necessity of enterprise efficiency, and the search for resilient cash flows. Our first pick is the foundational operating system for enterprise AI, Palantir Technologies. Trading around $23.50, the investment thesis has fundamentally evolved. The market is finally recognizing the explosive breakout in its US commercial segment, which is the primary alpha driver. We are seeing US commercial revenue growth rates accelerating to over 40% year over year, driven by the rapid adoption of their artificial intelligence platform, or AIP. This is not future promise, this is current execution. Critically, Palantir has now sustained GAAP profitability for multiple consecutive quarters, a key milestone that unlocks a vast new pool of institutional capital. With a pristine balance sheet holding a substantial net cash position, the company is funding this hypergrowth internally. The valuation, while not cheap on a trailing basis, becomes highly attractive when you isolate the commercial segment's growth trajectory, making this a core holding for direct exposure to enterprise AI adoption. Our second pick operates on the principle that in a digital world, security is non-negotiable. That brings us to CrowdStrike. The company is the definitive leader in cloud-native cybersecurity, and its financial metrics are best in class. We are looking at a company growing its annual recurring revenue, or ARR, at a rate consistently above 30%, a remarkable feat at their scale. The key performance indicator for their moat is the dollar-based net retention rate, which remains above 120%, meaning existing customers are not just staying but are spending over 20% more each year. This is driven by the expansion into new security modules, proving the platform's power. Furthermore, CrowdStrike generates massive free cash flow, with a free cash flow margin approaching 30%, giving them immense operational flexibility. The valuation is premium, but you are paying for market leadership, superior growth, and a business model that is structurally essential to every modern enterprise. Third, we are identifying a high-quality industrial powerhouse perfectly positioned for the global infrastructure supercycle, Caterpillar. The thesis here is a direct play on reshoring, energy transition, and infrastructure upgrades. Caterpillar's strength is reflected in its massive order backlog, which provides excellent revenue visibility for the coming quarters. The company is a free cash flow machine, consistently generating billions in free cash flow, which it returns to shareholders through a reliably growing dividend and significant share buybacks. Critically, the stock is trading at a highly reasonable valuation, with a forward price-to-earnings ratio of approximately 15x, a significant discount to the broader market, yet it offers direct exposure to some of the most durable secular growth trends of the next decade. This is a classic growth at a reasonable price opportunity. Our fourth selection is a dominant semiconductor player that offers a unique, diversified exposure to the AI boom, Broadcom. While others focus purely on training GPUs, Broadcom is essential to the networking and connectivity that makes AI data centers function, commanding an estimated 70% plus market share in high-end networking switch silicon. This provides direct AI exposure. However, the acquisition of VMware has transformed the business, adding a massive high-margin enterprise software business with recurring revenue. This hybrid model is a fortress, generating industry-leading operating margins that are consistently above 50%. The synergy from VMware integration is just beginning, and the company's commitment to returning capital is clear, with a history of double-digit percentage dividend growth. You are buying an AI leader with a stable, high-margin software backbone. Finally, we are targeting a consumer-facing company at a critical inflection point, the Walt Disney Company. The stock has been a laggard, creating a compelling entry point. The investment thesis is a turnaround story driven by a renewed focus on profitability. The Parks division remains a best-in-class asset, generating massive operating income with significant pricing power, providing a stable cash flow floor for the entire company. The key catalyst is the direct-to-consumer streaming segment, which is now on a clear and management-guided path to achieving profitability within the next fiscal year. As the streaming business transitions from a cash drain to a cash contributor, the market will be forced to re-rate the entire company. You are buying a treasure trove of irreplaceable intellectual property at a moment of maximum pessimism, just as the financial inflection is set to occur. To summarize, this portfolio provides strategic exposure to enterprise AI with Palantir, non-discretionary cybersecurity with CrowdStrike, a value-oriented infrastructure play with Caterpillar, diversified AI and software with Broadcom, and a compelling turnaround story with Disney. This is a balanced, data-driven approach designed for sustained growth in the current market. Thank you for tuning into this portfolio deep dive. If this institutional-grade analysis provided clear, actionable insights, please hit like, subscribe, and share your thoughts in the comments below. We will catch you on the next video.